All right, here we go. So today I will be doing a breakdown of a trade or a breakdown of just my strategy. This was a trade that I didn't take mainly because it's the new year. It's Friday. I just didn't want to take a trade on Friday. But with that being said, let's hop right into it. And this right here is how I catch a lot of setups. This is also a smart money setup. So yeah. With that being said, let's hop right into it. Alright, so first what I'm gonna do is I'm gonna mark out my highest and lowest points um, of the pre-market session. So that will be uh, it's not really a lot to go from, but let me see here. The highest point from 8 o'clock was it was this, I guess. So boom, and then boom, 9:20 lowest point. 9:30 was open, so 9:20 would be the range. And then after that, what we're gonna do is go ahead and find our higher time frame zones, and that's gonna be on the daily time frame. So daily time frame, you come right here. You see we have supply, fair value gap, pause, and then strong move again. So this shows there's a lot of distribution from right here, and also a lot of um, stop orders and liquidity. So what I would do is mark this supply and my fair value gap. So when price stops it, I will know. All right, yeah. So then what I do after that is I look for my liquidity points. So liquidity can also be major swing highs that holds a lot of liquidity before a strong move down or a big move down, equal highs or pre-high, pre-session high, pre-session low. Um, yeah, there's multiple ways that liquidity is being held. So I'm gonna say this one right here, liquidity. As you can see, we have this move up before this strong move down. Price came all the way down here from just this. So behind this is a lot of stop orders. And before price did this, it swept this liquidity. So it stopped out whoever had entered right here and then fake out as if it was going down. But price doesn't move until it takes liquidity. So whoever enters right here got swept out by this. So this comes again, it wicks above, not fully, tries to go down again, but price decided it needed more. So yeah, as you can see. So today now at open we have 9 a.m. 1 hour candle right here, wicking above this swing high. As you can see, the top of that candle right there, we wicked above the swing high. Boom. And then boom, boom, boom. Alright, so you drop back down to your 5 minute time frame and you wait for a open. Sir, move. So yeah, you drop back to your 5 minute time frame. You wait for open. Price pushed high. Swept liquidity. And even at open, price shows you what it wants to do. Because the first move we made was a reach out for liquidity right above this zone. And price failed to broke the low of this. So we know price is going for buy side liquidity, which is what it does. So what you would do is you draw your zones, mark out liquidity. Price has to take liquidity before it makes the move it wants to make. Before any smart money move, price has to take liquidity because that's what moved the market. Liquidity, fair value gaps, and supply or demand zones, unfilled orders, and yep. So as soon as price stops your zone, what you will do is drop down to the. Wait, I'm just checking on something right here. Yeah, we also have liquidity above this area too, as you can see. The double top liquidity, the double top body of these two candles. Let me see if I can get a zoom in. Yeah, we have a double top body candle right here. Trend line liquidity, also equal top liquidity again, right here. So we have a lot of liquidity on the sell side, which price needs to take before it makes its move, before it decides where it actually wants to go. So yeah, all these are equal highs. A lot of equal high right there. So yeah, liquidity there, liquidity here, liquidity bear, whatever. But yeah. Yep. So price reaches out. You see that we failed to go down. So price reaches out for your zone. Your zone is not the biggest, but it's still a clear zone. It's still a beautiful A plus zone. So, and it's located inside this fair value gap of this another supply zone, this another beautiful area. So you drop down to a lower time frame, 1 minute, 30 second, or 15 second. When price stops your zone, what you're gonna look for is a strong rejection, one more of like a large displacement. So you'd look for something like this when price stops your zone. And what that displacement would do is after a price creates that first leg of reversal, let's just say it's creating an M. Price creates that first leg of the M. You need that displacement so when price retraces, it has those unfilled orders to push price back down or mitigation for price to fill orders, gain strength, and push back down after taking liquidity and pushing higher. So yeah, we have a push up into the zone, price stopped. The rejection wasn't instant, but after the tap, price rejected hardly. Hardly. What the fuck type of English is that? So yeah, after price tapped the zone, it rejected. Not the best of best displacement that you're looking for, but at least you can see strong selling occurring right here. You can see that sellers are taking control. And maybe if you look to the 30 minutes time frame, you'd see a better displacement. Yeah, as you can see, it's almost the same displacement, not that much of a big leg. You'd want to see something like this much displacement, like this. But you didn't get that. But what you did got was three cell bearish candles. Three cell engulfed bearish candles. On this one, it looks a little better, but the displacement is still not as big as, you know, displacement that you'd actually want, or say something like this. But you did get the strong selling, which shows sellers are stepping in, right? And then it leaves the fair value gap for price to come back and tap into for the second leg. So let me go back to the 1 minute time frame. As you can see, we have the tap, boom, bearish engulf, another bearish engulf, which ended fully. That shows sellers are stepping in. Price reached this fair value gap premium, but from this major zone, this zone was known to fill orders and reverse price, supply, fair value gaps, and areas of liquidity. So price taps into this fair value gap, it rejects, but it's not strong enough to push price all the way back up, and that's where the displacement come in place. Because without this displacement, this right here could have pushed price all the way back up, but it probably would have bounced back off this fair value gap because it's still unfilled orders and it's a larger time frame. It's a larger bias, which holds more strength. Larger biases hold more strength. 4 hour time frame, 1 hour time frame, and the daily time frame. So what you get, the rejection you get from this area wasn't strong. As you see, it couldn't push price back all the way up, and then we had a indecision which tapped into this fair value gap rejection, which show you sellers are still, keeping up. And then right here again, we had liquidity, which is actually good for business, because if price takes this liquidity, react from the fair value gap, and broke structure right here, that is a clear confirmation of a sell setup. So what we see here is liquidity being formed, order block, and then price swept liquidity, and then we got that massive rejection, and then the second rejection, price stopped into here, tricking retail buyers into thinking price is going to be pushed higher, because first price stopped into this, didn't get the strong rejection, and then secondly we created this next leg of imbalance. So retail buyers probably got faked out from this, but what price does is swept liquidity, tapped into sell fair value gap that was created from the displacement, and also this reach out to tap into this fair value gap plus take this liquidity, creates the second leg of your M. So this right here would be your initial M pattern. boom, 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 and then boom. Yeah. Usually you'd get a boom and then a little retracement, which is probably what this is, but not the best of the best. But yeah, that right there is your M pattern. Okay, so this break wasn't the best because we had the break. Price rejected twice after the break, but that was retracement, as I said, the small retracement that you'd look for. Retracement and then break of this candle, which is continuation. So that confirms that, yeah, sellers are more in control. And then this break was a engulfed candle. So that shows also that sellers are strong enough to push price all the way down. So this right here would be a entry point. Entry point 1. This right here wouldn't be. This right here would be the not so aggressive. The aggressive one would be as soon as price breaking this. So most people probably entered from this candle. As soon as price failed to break the high of the first leg, push price down, break this neckline right here, most people would enter, which is the aggressive. The less aggressive is price showing strength of breaking structure, retracement, and then continuation. So yeah, this right here is a beautiful setup. This probably like a 1 to 4 risk ratio, win reward. Yeah, I'm guessing, but I'm just going off the dome right here, reading market structure and giving it to y'all how it is, because this exactly how it is. So, yep. And then let me mark out where market opens. So, this right here was market open. We went up. We took pre-highs liquidity, went down pre-lows liquidity. Price tried to push lower, but failed because we don't really have any liquidity below here. Price could have reversed, but that would be just noise in the market. Because as I say, what it did right here was create AM, but this M is invalid because price didn't take liquidity before going down. Yeah, we took pre-high liquidity, pre-low liquidity, but we didn't tap into fair value gap or a supply zone. So this right here is a fake out. Retail traders fall for this and lose their money. So fake out happens, failed. Price gets pushed higher into taking liquidity and tapping into this fair value gap plus supply zone on the higher time frame. Rejection, broke off, you know, mini structure from the rejection. Because see, we have a pause right here and then push up again. This rejection right here broke the bottom of this pause. So that shows smart money and sellers are stepping in. Then from the engulf, which we need to confirm that price is going to be selling, we got it. And then retracement, liquidity, and yeah. The next confirmation is that if price breaks the high of this first leg right here, then the reversal is canceled. There is no point in looking for a reversal, because price breaking this leg and closing above it shows that distribution hasn't been finished yet. Smart money hasn't finished sweeping liquidity and still hasn't decided to start selling yet. So if price had broke the leg of this first leg of the M, then the reversal would be a no-no. And also, if we didn't have this strong selling or displacement or engulfed candles showing selling pressure, then also the reversal would have probably been invalid or not so trustworthy. But we did get engulfed candles showing strong selling pressure, not the displacement we'd want, but yeah, we still have fair value gaps of a good size being created. Then price paused, fill orders, went up for liquidity, then we have that strong selling. And the entry would be aggressive entry, break off right here, and then the less aggressive confirmation type would be right here after the retracement and then continuation with large displacement also would be right here, right? So yeah, that's basically it in a nutshell. And then your target would be, yeah, the next zone, next fair value gap, next area of liquidity. So as I said, major swing high holds liquidity, major swing low holds liquidity also. Plus we have fair value gap, and a fair value gap, larger fair value gap, 1 hour fair value gap down here, plus liquidity below this area, plus fair value gap. So we have liquidity about below all these areas, liquidity, liquidity below right here, fair value gap. So yeah, that basically maps out most of what you need. Your entry and your take profit if you're going for longs or if you're just going for a 1 to 2 risk ratio. And also if you come back to the daily time frame, you see where price fill all orders, all buy orders on this candle. Still didn't tap into right here, but we did get all these orders being filled. That's smart money distribution. And 5 minute time frame, I don't think anything much is on that. Not really. Not really. But as you see, we created a pause and then strong bearish engulf again, and then price came back, fill orders, and tap into supply, fair value gap, and from that we got a rejection and sellers step back in. This was just a pause for orders being filled, and then smart money continues to sell. So if there's any questions that anybody needs to ask, I can answer, or I'll try my best to answer. This right here is market mastery. Looking at the charts, knowing why it moves, knowing how it moves, knowing where it wants to go, and also being able to tell what it's about to do just by looking at price action, or knowing what smart money is doing and move with smart money. This strategy right here is basically just pace projection, the direction of which price is going to go next, and how fast it's gonna happen, basically. If I get a M, this right here, and it doesn't give me a strong displacement or a strong rejection, it's a no trade for me. If this second leg broke the high of this first leg and closes above it, it's a no trade for me. If it wicks above it and we got a next strong rejection from that wick above and engulf, then yeah, I might consider that being still a valid reversal setup. But at the same time, my confirmations have to be very strong for me to take a trade. And not all the time the market creates my system or my setup. For a month straight, I remember I couldn't get a trade because there was no setup. My system wasn't there, my strategy, my plan, like nothing at all. No A plus setups. It was just all smart money setups, yeah, market rebalancing itself and reacting to noise and etc. But what you can do is grasp all that information from what the market is doing. That's how market mastery comes into play. Sitting on the chart, locking in, make sure you know everything that this market does, why it moves, how it moves, when it moves, what causes it to move, and where it wants to go when it moves, what it does before it moves, what it looks like when it's about to move. How do you confirm that it's going to move? Where is it going when it moves? You can't really predict everything. Not predict, you can't really always be right on everything, but 90% of analysis and smart money movements are, what would I say? They're valid. If there's a zone that price needs to go to, it's going to go there, basically. If liquidity lies there, price is going to go there. As long as distribution is good, price is going to go there. If demand is high or supply is high or low, if demand is high, price is going to go. And if supply is high, price is going to go. If liquidity lies, price is going to go. If unfilled orders are there, price is going to go. Because one thing also is that banks don't like unfilled orders. That's why the market rebalances itself and fill all gaps. Say NASDAQ goes to 26,000. There's a big ass fair value gap at 25,500. Price has to come back. Might not be today, tomorrow, or another day, but it will come back. Maybe next month. Price has to fill all imbalances before it goes where it wants to go. Because smart money and banks hate to leave unfilled orders. But yeah, this is my strategy, my system, and my setup. All I do is trade with discipline. I never break a rule. I never go outside of my system. I follow my system. I never break my system. I follow every rule that is being set by me, and discipline, knowledge, focus, and psychology. And then the biggest thing of all is that you have to be able to control your emotions and your mind, your thoughts, your mindset, because you can't control the charts, but you can control what you think about. You can control your mind. You can control your actions. You can control yourself. But basically, whatever else that's on the chart, you don't have control over that. You can just follow where price goes, but with precision and with discipline. So yeah, with that being said, this was just a quick breakdown of how I take this trade, how I'd win won this trade, how I'd win this trade. I don't know what the fuck's wrong with my English, but yeah, this is how I'd win this trade, how I'd take this trade, and basically the blueprint of most of my won trades and also my lost trades. But those are the trades that I learned from to refine this strategy into being so perfect, because this strategy is basically the best. All it requires is me, basically. But yeah. Okay, so thank you for watching. If there's any question that you have, you can leave it down in the comments. Like, follow, and subscribe, because I will be posting more videos of smart money setups, smart money concepts, how does the market moves, why it moves, and teaching market mastery, how to master discipline, psychology, and being more knowledgeable on the charts and off the charts, maybe. That's all from within, but it can be taught if a person is willing to learn. But yeah, most of what I just broke down shouldn't be that hard if you already know the basics of trading. But if there's anything that you want to know, I can still make a video on that, or you could just shoot me a question maybe in the comments or on my Instagram. Uh, yeah, I'll probably put my Instagram handle down in the descriptions. Or you can join my Discord. I have a group where I go live and I post my trade results and also signals and live trade, if that's something you guys would want in the future. But yeah, by far this was a plus setup, a good trade, and my system, my strategy, and my setup, and here I am breaking it down for free. It's probably not the best explanation I could give, but yeah, why I took the trade, why I would took the trade, and etc.